Moving to Europe, Switzerland and the European Union have reached a historic deal to update their trading relationship, overcoming Swiss concerns about immigration. European Commission President Ursula von der Leyen hailed the agreement as crucial in light of geopolitical tensions. The deal, which covers areas including electricity, state aid, transport and freedom of movement, is set for approval by both Swiss and European parliaments. However, it's likely to face a public referendum in Switzerland, where critics are organizing opposition. The President of the European Council, Antonio Costa, stated that the European Union will provide an additional 30 billion euros of financial support to Ukraine in 2025. Costa added that the European Union has already provided about 130 billion euros in financial support to Ukraine since the beginning of the war in 2022.
Targets the so-called shadow fleet. Second, we have already delivered about
Sweden has announced that it will halt funding to the UN Agency for Palestinian Refugees and redirect support to Gaza through other humanitarian organizations. This decision follows Israel's move to ban UNRWA operations from late January. Sweden plans to raise its aid to Gaza to 800 million Swedish crowns, $72.44 million in 2024, up from 451 million crowns this year. Funds will be channeled through agencies like UNICEF, WFP, and the Red Cross. British retail sales grew by just 0.2% in November, missing expectations of a 0.5% rise. Despite overcoming concerns about the government's budget, the data showed only a modest recovery. Over the 3 months to November, sales rose 0.3%, the weakest since June. The economy had contracted in September and October, partly due to tax hikes on businesses. The Bank of England projects zero growth in Q4 2024, citing persistent inflation pressures. United Kingdom long-term borrowing costs are nearing their highest levels in 26 years, with the yield on 30-year bonds climbing to 5.16% after inflation hit 2.6% in November. This marks 7 consecutive days of rising yields, the highest since 1998. Market expectations for interest rate cuts by the Bank of England have been reduced, with only 2 anticipated for next year, down from 4. Stock markets, including the FTSE 100, have been pressured, reflecting concerns over inflation and the potential impact of restrictive monetary policies. The Bank of England maintained rates at 4.75%, signaling a cautious approach to future cuts. The Russian central bank kept its key interest rate unchanged at 21%, despite expectations of a 2 percentage point increase. The decision follows recent tightening measures aimed at reducing inflation, which currently stands at 9.5%, well above the target of 4%. The central bank emphasized that the recent rate hikes have cooled credit activity and demand, creating favorable conditions for inflation to move towards the target. Inflation has been driven by military spending, wage increases, and a weakened ruble, which fell 15% against the dollar in November. The Kremlin has stated that any new G7 sanctions targeting Russia's oil industry would backfire. Kremlin spokesperson Dmitry Peskov emphasized that Russia would take steps to minimize the impact and adapt to any such measures. Peskov's comments followed a media report suggesting that the G7 was considering new sanctions on Russia's oil sector.